Hello everyone, welcome to my channel. Today I'm going to talk about how the rich pay less taxes legally. Let's get into the video. Most people hear that wealthy individuals pay less taxes and assume they are cheating the system. But the truth is this, the wealthy ain't doing anything illegal. They are simply using the tax code as it was designed. The tax system rewards certain behaviors and penalizes others. Average earners often do not realize this because they only rely on a W 2 paycheck, while the wealthy structure their finances in ways that unlocks deductions, credit, and incentives the government wants people to use. Here's how the rich legally lower their tax bill. Strategies anyone can learn from and apply on a smaller scale. The first thing is the rich do not earn their money, they build it. Most people earn money through a job, which is taxed at the highest rates. The wealthy, however, rely on capital gains, business income, and investment, which are taxed far more favorable. W 2 income, worse tax treatment. Employees pay federal income tax, state tax in most states, Social Security, Medicare, additional Medicare tax, investment income, much better treatment. Long term capital gains are taxed at 0%, 15%, or 20%, depending on income. This is often significantly lower than W 2 tax brackets. In other words, the less you rely on a paycheck, the less you pay in taxes. Second thing is they use depreciation to reduce taxable income. Depreciation is one of the most powerful tax tools, and the rich love it. Real estate investors, for example, can deduct the wear and tear of a property over time, even if it's actually increasing in market value. This means the landlord could pocket 1,000 a month in rental income, but the IRS may only tax them on half of that or even less, thanks to depreciation. Adding bonus depreciation, cost segregation studies, and business assets write off, and many wealthy individuals pay little to no taxes on real estate income. The third thing, they start businesses to unlock massive deductions. One of the biggest differences between the rich and everyone else is this: employees get taxed on income before spending. Business owners spend first and get taxed on what's left. Business owners can legally deduct vehicles, meals and travel, home office expenses, supplies and equipment, marketing costs, health insurance, retirement contributions, even part of their income and internet bills. The tax code rewards businesses because businesses stimulate the economy. This is why many wealthy people own LLCs, S corps, or partnerships, not just to make money, but to unlock valuable tax advantages. The fourth thing is they borrow against their assets instead of selling them. This is one of the biggest secrets the everyday person never hears about. Wealthy people often live off loans, using their assets as collateral, tax free. Here is why. If you sell a stock or property, you pay capital gains tax. But if you borrow against it, you pay zero tax because loans are not taxable income. This tragedy is common among real estate investors, business owners, high net worth individuals. They may borrow at 3 to 5% interest while their assets grow at a 7 to 10%, all without triggering a taxable event. This is how billionaires can appear to have minimal tax income on paper despite living very comfortable. The fifth thing is they maximize retirement accounts. The wealthy take advantage of retirement vehicles differently than most. They use self-directed IRAs, solo 401ks, defined benefit plans, backdoor Roth IRAs, mega backdoor Roth IRAs. These accounts offer tax-free growth, tax-deferred contributions, higher contribution limits than traditional IRAs or employer plans. Many high-income earners can shelter tens or even hundreds of thousands of dollars per year this way. Retirement accounts ain't just for retirement. They are elite tax saving tools. The sixth thing is they use trust to reduce tax exposure. Trusts are often misunderstood. They are not just for super wealthy, they are tools for anyone who wants to. Reduce estate taxes, protect assets, avoid probate, control distributions of wealth, plan multi generational tax savings. The wealthy frequently use revocable living trusts, irrevocable trusts, charitable remainder trusts, grantor retained annuity trusts. This allowed families to pass assets down efficiently while minimizing tax consequences. The next thing is they optimize their giving strategies. The rich use charity giving in smarter and more strategical ways. Instead of simply donating money, they use tools like donor advised funds, charitable trusts, appreciated stock donations, qualified charitable distributions from IRA. These methods offer large deductions, reduced capital gains, immediate tax benefits, long term charitable impacts. The wealthiest donors actually save significantly on taxes by giving strategically. My closing thoughts on this are the tax code rewards behavior, not income. The rich do not pay less in taxes because they are cheating. They pay less because they understand the rules. The government wants people to start businesses, buy real estate, invest money, hire employees, save for retirement, make long term investments, donate to charity. So the tax code gives incentives for those activities. You do not need millions to use these strategies. You just need knowledge and the willingness to act. If you learn the system, you can legally reduce your taxes like the wealthy do. Thanks for watching this video and do not forget to subscribe to my channel.